Hi everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. Today we're diving into a proxy statement, which might sound boring, but trust me, it's like the secret diary of a company. We'll uncover everything from how much executives get paid to some pretty serious votes that could reshape Comscore's future. Think of it as corporate plastic surgery, but with stocks and shares. Comscore, a company that measures audiences and provides analytics, is asking its shareholders to make some big decisions at their annual meeting in June. There are 7 proposals, including electing directors, voting on executive pay, picking an accounting firm, changing their stock plans, and issuing more stocks. Let's get into it. First up, we have the election of directors. Itzhak Fisher, Jeff Murphy, and Marty Patterson are nominated as Class 3 directors. Basically, we get to vote on who will be steering the ship for the next few years. It's important because these people make big decisions about how Comscore is run. Next, we have a say on pay vote. This isn't binding, meaning it won't actually change anything, but it lets shareholders give their opinion on how much the top executives are getting paid. It's like a report card for the bosses. Then we're asked to ratify Deloitte and Touche as the company's independent accounting firm for the year. Think of this as double-checking the company's financial homework with a trusted source. Now things get interesting. Comscore wants to increase the number of shares they can hand out under their equity and incentive plan by 2 million. This is how they attract and keep employees, by giving them a piece of the company. If this doesn't pass, Comscore might have trouble attracting new employees. Comscore wants to amend their certificate of incorporation to increase the total number of shares they can issue from about 119 million to about 122 million, and the number of common stock shares from about 14 million to almost 17 million. This gives them more flexibility to issue stock in the future. They also want to amend the rules for their Series B preferred stock. The amendment does 2 things. First, increase the number of those preferred shares from 100 million to 104 million. Then it would count shares of preferred stocks that they issue in payment of dividends to the Series B stockholders toward a threshold that would trigger a mandatory conversion of preferred stock into common stock. Finally, they're asking for approval to potentially issue more shares of common stock or Series B. Preferred stock as payment for dividends. The reason they're asking is that stock exchanges like Nasdaq have rules about how many shares a company can issue without getting shareholder approval, because they can't predict if they need to issue shares in the future to pay the dividends. They are seeking approval now. Okay, let's talk about what happens if you don't vote. It depends on how your shares are held. If you're a stockholder of record, your shares won't be voted. If your shares are held by a bank or broker, they can vote on some things like ratifying the accounting firm, but not on others like electing directors or approving executive pay. This is called a broker non-vote. The board is recommending that you vote for all the proposals. Basically, they want you to approve their plans for the future of the company. Here's a twist. Some shareholders have to vote in a neutral manner, meaning they have to vote their shares in the same way as everyone else in the election of directors. It is important to know who is in the board and who are independent. The board has 3 committees: audit, compensation, and nominating and governance. It's not all about making money. The board must also mitigate company risks. The board oversees management of risks, with the audit committee looking at financial, regulatory, security, and compliance risks. The compensation committee handles risks around executive pay and company culture. Let's dive into the director compensation. Nana Banerjee earned fees of $129,623, and the stock awards were valued at $1,510 before leaving the board. It is important to keep an eye on this section of the filling. Now, let's get to the really juicy stuff. Executive compensation. In 2024, John Carpenter, the CEO, had a salary of $600,000 with other compensation for a total of $657, with other compensation for a total of $657 and $557. Finally, Mary Margaret Curry had a salary of $400,000 with other compensation for a total of $426,990. Margaret Curry had a salary of $400,000 with other compensation for a total of $426,997. There are also descriptions of agreements that would accelerate a $300 or salary of $400,000 with other compensation for a total of $400,000 with other compensation for a total of $426,997. There are also descriptions of agreements that would accelerate their equity if there is a change of control. Oh, and one last thing. If you attend the annual meeting, any votes you cast at the meeting will override your proxy. If a bank, broker, or other nominee that holds your shares giving you the right to vote the shares in street name and you wish to attend the 2025 annual meeting and vote in person, you must obtain a legal proxy from the bank, broker, or other nominee that holds your shares giving you the right to vote the shares. The filling reports some details on transactions with related parties such as WPP, Charter, and Curate, which are all major investors or have ties to board members. Comscore does business with WPP, the advertising giant. Comscore received about $7 million in revenue and paid out about $9 million in expenses to WPP and its affiliates. Comscore's commercial transactions with Charter and its affiliates resulted in approximately $2.0 million, $21.7 million of expense. Comscore transactions with Curate and its affiliates resulted in approximately $0.9 million of revenue. Who owns Comscore? WPP owns about 11.5% of their common stock. Cerberus Capital Management, Charter Communications, and Liberty Broadband each own about 33% of the Series B preferred stock. Deloitte, Comscore's accounting firm, charged about $1.8 million in audit fees. There are also some additional audit fees of $50,000. Itzhak Fisher, Jeff Murphy, and Marty Patterson comprise the audit committee and have reviewed the numbers. Let's talk about the pay versus performance section. It is a complicated calculation that determines how the executive pay relates to financial performance. For CEO John Carpenter's actual pay, there was a reduction from summary compensation table total of $657 to $291,000, $11.07 to $21.55 So, what's the big picture here? Comscore is asking its shareholders to approve a lot of changes. They need to make sure they have enough stock to attract employees and pay dividends. But these issuances could dilute the stock. Now, looking at these requests broadly, one might ask some questions. While Comscore is making strides in some areas, the numbers are still showing a net loss of $60 million. It will be up to the judgment of any individual stockholder to make their own choices to reflect their unique point of view. Thanks for watching. Now, if you enjoyed this breakdown, make sure to hit that like button, leave a comment, and subscribe for more corporate deep dives. We'll see you in the next video.